Today I'm going to tell you the biggest investing mistake that 99% of the people make and how you can instead use a strategy that true savvy investors use. I guarantee that if you follow my advice, you will not make another mistake when investing. This might be the best investment video if you are self-employed. If you are new to my channel, my name is Jas Oberoi and I'm a real estate agent, investor and a serial entrepreneur. I went from working as a server to owning multi-million dollar worth of real estate portfolio in just 8 years. In my career, I have helped hundreds of my clients buy over 900 million worth of real estate using tried and tested strategies, and I am here to share those tips with you on this channel. One of the biggest problems I see that people have money and they are eager to invest, but they don't know how to do it right. They make a lot of rookie mistakes. When you're starting out, you might think it's not a big deal and that you will figure it out as you go. But no, these small mistakes are going to cost you an arm and a leg. Whether you're buying 2 properties or 10 properties, you need to invest the right way. For most of you, you will start with buying a residential property as an investment under your personal name and then slowly add more to your portfolio. Soon you will realize that you will hit your maximum because you are buying properties under your personal name. That's the absolute worst thing you can do. 2 things will happen. Number 1, you increase your tax bracket because you need a higher income to qualify for all these investments. And number 2, you put yourself in a position where you will be taxed heavily when you sell these properties. And the government will love you for this, but your bank account won't. Believe it or not, 99% of the people make this mistake. They won't realize this mistake until they are too far into the game. So what's the right strategy? The right strategy is having the right company structure and buying under holding companies. Only your principal property should be under your personal name because when you sell that property, you will not be paying any taxes on it. Anything investment, you should always be purchasing under a holding company, not a personal name. We are not going to get into too much details as each of your companies will be structured differently, but I will give you an overview of the right way to invest. As you can see on the screen, what usually happens is that you make your money in your operating company. You pay yourself either a dividend or a salary, and obviously that money gets shifted over from your business account to your personal income. My first advice is to pay yourself as little as possible, just enough to cover your personal expenses, and pay yourself as a dividend versus salary. If you want to know why don't you check out my video on accounting basics, which they don't tell you. After that, the money you have left in your operating company, move it into your main holding company. This holding company is only going to be there to hold the money. Now, the money that you are taking out from your operating company and putting into your main holding company, you are going to be transferring this as a dividend, which means you are not going to be paying any tax on it since it's an interrelated dividend transfer. Now, from here, you are going to be making different holding companies and buying properties under them to separate them based on your partnerships. So if you look into this, holding company number 1, number 2, number 3, and so forth. This is how, generally speaking, you are going to structure your company so that you are paying as less tax as possible and still are able to grow your portfolio and buy as many properties as possible. Team, now that you know the right company structure, I want you to pay attention to something that's very important. Your people, your team. Just like when you are building a business from a small mom and pop style of to a large business, you need a team. When it comes to real estate, the same thing applies. When you're thinking big and looking to buy 10 or more properties, you need a solid team with the A players only. You need a team of people like an accountant, lawyers, brokers, whether it's a commercial, residential, financial advisors. You need realtors, etc. to get to that point. The way I told you earlier, your accountant should be telling you how to pay yourself, how to save taxes, structuring your portfolio, etc. Same applies to your lawyer, broker, realtor. They all need to work together. Every one of your team members needs to pull their weight so that your portfolio keep growing and you are paying as little tax as possible, and that's everything legally. The biggest issue that arises with your team is that they don't talk to each other. Your accountant doesn't talk to your lawyer doesn't talk to your commercial broker doesn't talk to your realtor. You are the spokesperson or the communicator that talks to all of them. You are the glue. But being the glue is a full-time job. If you're a professional or a business owner watching this, you are probably thinking, I don't have a time or the patience to be the glue because you are working hard to grow your business, which I completely agree with. After all, end of the day, that's your bread and butter. But you can't ignore the fact that investing is important and most millionaires became one because of real estate. Now, if you're in BC, I can replace your role and be that glue in the middle. I will do all the running for you. I have done this for a lot of my clients to ensure they have a hassle-free experience. And in any way, if you're thinking, you're doing okay on your own, then you have to remember that you still need to know the answers to your questions. Actually, before even asking the questions, you need to come up with the right questions to ask your team of professionals. Questions like, how can I add 10 properties in my portfolio without being taxed an arm and a leg? Should I buy my next properties under my personal name or holding company? What is the most ideal structure for my company so I can take advantage of exclusive lending strategies like 100% financing? Should I buy residential properties over commercial or vice versa? Or how will I increase my commercial property value or residential property value? If you didn't know the answers to these questions or haven't asked these questions, then you will need to reevaluate your strategy. My last advice to you would be invest in commercial properties instead of residential. The main reason that I think commercial real estate is better than residential is because it's hassle and headache free compared to residential. But if you're starting out and don't have enough money in your bank, then residential property is a great investment because you can multiply your money fairly quickly, but the commercial should be your end goal. These commercial properties are the type of properties that you buy and then you forget about it, at least for next 10 years. Actually, you can even forget about it until your retirement. And then once you're retired, you can maybe slowly start thinking about disposing of them. I won't go too much in detail in this video about the reasons you should be investing in commercial over residential, but I will tell you that commercial is a headache free, your tenant pays for everything, and it is way better on your financing side too. Oh, and even in today's market, some commercial rental properties, you can have a positive cash flow too, even with this high interest rates. So if you're interested in this, be sure to check out my video, why commercial investment are superior than residential. If you like today's video, be sure to check out my video on cap rates and how triple net leases play a big role in determining cap rates. And if you like this video, do like, subscribe, and tap the bell icon so you won't miss our future videos. Until then, see you next time. Take care.